Cathie Wood predicted that Bitcoin would hit $1.5 million by the year 2030. The problem is, at the time of recording this video, Bitcoin is less than $75,000. I'm not sure that it's going to hit $500,000 by 2030, let alone $1 million. So what was her case in putting out that prediction? Will it actually hit that? And what should you consider doing with Bitcoin right now? Because we are in April and there is something special that tends to happen with Bitcoin in April. My name is Kevin. I'm a financial planner and I can help you build confidence, clarity, and momentum in this economy. Let's go ahead and break it down. For those that don't know, Cathie Wood is an investor who tries to find companies on the cutting edge. She's one of the first people to put major money behind Tesla, behind Coinbase, and several other companies that at the time that she was putting money into them, you have never heard of them. I would argue that she is perhaps the Warren Buffett of the tech industry in some ways. Now, whether she has made as much money as Warren Buffett, story for another day. But she is worth listening to, especially when it comes to the tech side of things. But here's the thing. She has a very interesting case as to why she thought Bitcoin was going to hit $1.5 million, and she still has some time for that prediction to come true. The first thing is, it came down to asset class. Asset class is a type of investment, a new category for us to put our money into. And her first case, and I would argue this is the most compelling and one I have not heard before, when was the last time we have had a new category of investments, of assets that we could actually buy? Since the 1800s, you could buy stocks, that's one. You could almost always buy real estate, that's another one. Then you had stuff like gold and wheat and all that type of stuff. We call those commodities. Cool. You've had those for well over 200 years. Now, real estate and gold, that stuff goes back even further, right? But if the stock market was the quote-unquote newest area, that's really it. Bitcoin is a new space that did not exist before, and it does not, according to her, does not behave like the others, which is very interesting because it doesn't always grow in the exact same way the stock market does. When the market is up, Bitcoin ain't always up, and it doesn't travel in the same way. We know it's nothing like the real estate market, and technically it ain't like gold. Gold has been up over the last year, and Bitcoin is not. So she's right about that. It is a brand new asset class, and because it is a new asset class, her case for the institutional side is, if there is a new asset class, they want to offer something that's different than their other competitors. And it's like, oh, wait a minute, you know, Fidelity is doing something and BlackRock's not, I'm gonna go to Fidelity. So that's a part of it. Everybody's competitive. You don't want to have something that your competitor doesn't and you're left on the sideline. But also, if we learn more about cryptocurrency, more about Bitcoin, and we understand that, hey, the real estate market is not performing well, the stock market is not performing well, and Bitcoin does do well, you want to have access to it. You don't want to be left out on the sideline. And institutional investment, institutional dollars, they want to be in on the game. And that's one reason why the Bitcoin ETF was launched, and that's one reason as to why it has grown the way that it does and why it's so big in the mainstream the way that it is today. Now, I argue, we'll get to this here in the second part of the video, that they can be a double-edged sword. But those were her top two reasons. She also says that it is a store of value. Now this, I would argue, is the weakest argument. Again, I will try and save my critiques here, but again, you can put your money into it and hopefully it does grow in value. And then also it can be valuable in emerging markets. Venezuela is a case in this example. Countries that don't have stable currencies, you can put your money not just in Bitcoin, but a stable coin where the money is in something that you know isn't necessarily going to move, and you can buy goods without the price exploding in value due to hyperinflation. No, gas prices today in 2026 is not hyperinflation, but it is far too high and is rising far too quickly. Those are the positive cases. Now, what do I think as someone who has studied economics, I got degrees in these things, and someone as a financial advisor? The store of value is the weakest case. Yes, Bitcoin has grown. Yes, Bitcoin is growing right now at the time I'm doing this video. We'll see what it does in the future. But we have seen this over and over again. We've seen it with athletes. There are some times where we've seen athletes take a portion or a major chunk of their salary and say, hey, pay me in Bitcoin. There are times where, hey, you got paid when it's $45,000 and shot to $100,000. Great move for you. And there are other times you got paid when it was $100,000 and then it dropped to $45,000 and it just reversed. I don't know if having a quote unquote store of value or having it as digital gold makes sense when the case of having gold was when the world falls apart and there's chaos overseas and tariffs going left and right like we saw in 2025 and parts of 2026 so far. Gold took off because of those things. You went to safety. Gold was safety. We saw that Bitcoin was not safety last year. Those two things don't truly make sense. And if I'm trying to go to safety and my safety net was $100,000 in Bitcoin and it vanished overnight and went from 100 to 80, and by the time I went to lunch it was from 80 to 75, that's not safety to me. That's not a store of value to me. That's a store of volatility. Now it can also, again, it can rise, but I'm not sure that's a store of value. That's more of, yes, an investment, and I would just keep it as that, not necessarily a store of value. When it comes to a new asset class, that is true. She argued that right now institutional investment is about $100 billion into it, but Bitcoin is capped, and it ain't gonna be but so many more Bitcoins made ever. And there are trillions with a T, trillions of dollars in institutional investment that is out there that can be flowed to Bitcoin. There can be a supply and demand issue here. And if you are in, I would quote unquote early, you can make some money. In theory, you could absolutely make some money. The question is, will people care at that point? Yes or no? I can't guarantee that. I can't guarantee. There's supply and demand things on a lot of things out there that people just don't necessarily care about. We will see when the time comes. But speaking of time, in April, we do know that Bitcoin does historically increase. Now, Bitcoin was at one point in the 60s. The time I'm doing this is in the low 70,000s, and perhaps it'll rise. We'll see. I'm not going to put a target on it. I'm not the type of person foolish enough to say that it's going to be by X price in X date. No. That's not what I believe a wise person does. However, what I will say is this: how should you navigate your portfolio? And how much should you have in Bitcoin? Again, I am a financial planner. My job is to sit down with my clients and understand what their goals are and help them decide how much money goes into which investments and why. And for most people, you need to have a cap on how much you put into something like Bitcoin because of its volatility. Now, for me, that cap is 5%. And I'll also tell you, and I'm transparent in this, I have been dollar cost averaging ever since Bitcoin started to fall. Your boy has been loading up on Bitcoin. I'm telling you that right now. Every 2 weeks, I'm putting just a little bit more in Bitcoin, and I will be continuing to do so long as my budget holds up, okay? And once I hit that 5%, I'm stopping, and I'm just gonna let it ride until I stop caring, right? Which, it's only 5% of my overall portfolio. It should not become an issue because, it is a relatively small part of my portfolio. What I will say though is what impacts most investors is the fact that we feel like we have to be in everything, and everything that is popping and trending at the time. You feel like, oh my God, I gotta go and get this, I gotta go and get that. I'm gonna tell you this right now in April 2026. If Bitcoin ever gets back to 100,000, and I think at some point it will. I'm not gonna give you a date because I don't know. If Bitcoin gets to 200,000 or 300,000 at some point in time in the future, if Cathie Wood is right at any point in the future and it hits $1 million or 1.5, right now would be the time for you to get in. Right now would be the time for you to get in. The difference though is not to be jaded and to put 50% of your portfolio into it and just go into it blindly and just assume that the minute I'm going to get in, it's going to take off and just blow up, and I'm staking my entire reputation on it, and I'm staking my entire portfolio and future on it. That part is the dangerous piece, and that's why I see so many people get burned. what I would, couch and perhaps recommend if I was talking to a client is, yeah, sure, you can have some of your money in it. Notice for me, I said, yeah, 5%. I will slowly work up to it. If it hits that number, great. If it hits $100,000, great for me. If it doesn't, it's not gonna hurt me in my budget to do so. That is how you want to do this, because the problem with it, with Bitcoin in general, and putting so much money behind it as an individual, not a fund, is the fact that you don't know enough about it. You do not, as an individual, know enough about it. And the reason I say that is because there aren't enough cases. And I'm pointing to my bookshelf here. We don't have 7 times Bitcoin has been through a recession. It ain't been around through 7 recessions. The stock market has. It hasn't been around through 7 different times of, hyperinflation or different presidents, or we just haven't had, it hasn't gone through enough rigorous testing for us to know this is exactly how it performs in these different environments and how people react to these things. We do not know. Perhaps it works, perhaps it doesn't. And I would argue the biggest and perhaps most transformative thing that we need to know that we do not know yet is this. If, keyword if, millennials and Gen Z are the biggest investors in Bitcoin, and I'm not sure if that's the case, what happens if we are the biggest buyers of Bitcoin? We age, right? What happens when we are ready to retire and we start to sell those Bitcoins, right? Because we have to use that money. What happens then? Are we gonna be selling it to ourselves? Is that gonna be the biggest Bitcoin recession ever in 30 years or something? I don't know. I'm not sure. But that is a concern. We wouldn't know because it has not happened yet. We know how this works with the stock market because it has been around for over 200 years. I'm not telling you that Bitcoin needs to be around for 200 years. What I am saying is it ain't been around long enough for us to have concrete certainty around how it acts in different markets, in different contexts. We don't know. It went through one pandemic. It went through maybe one recession, and that was the fastest recession in 2020. That's it. I'm not sure if that's enough evidence for me to be more confident in saying, yeah, 20-30% makes more sense. And that is the piece where I can't be as confident as Cathie is. And that's the problem here. That is the biggest problem here. You want to learn more about investing and whether or not you should trust Bitcoin or other investments that you should consider adding to your portfolio, you want to check out this video right here.